Welcome to this explainer. Today, we're diving straight into the massive growth, the wild structural engineering shifts, and yes, the underlying risks of AI memory stocks. You know, GPUs always get the glory, but right now, there is a massive paradigm shift happening quietly right under our noses. We're looking at a sector that historically was notorious for these terrible boom and bust cycles, but is currently seeing explosive, almost parabolic growth. So we have to ask, is this just a massive bubble about to pop? Or are we looking at a fundamental change in hardware architecture? Let's find out.
Okay, let's talk about $6 billion. To give you a real sense of the sheer hype driving this market right now, consider this. A brand new memory ETF launched recently, and it took in over $6 billion in assets in just its first 5 weeks. It soared over 100% in less than a month. Goldman Sachs literally called it the fastest growing ETF they have ever seen, noting it pulled in over $1 billion of inflows in a single day. And if you look at individual stocks, a $25,000 investment in a company like SanDisk last year would be worth a cool $1 million today. The momentum is absolutely staggering.
So we're going to unpack exactly why these stocks are exploding. We'll be mapping out the AI memory boom, how the industry is trying to escape the dreaded historical pig cycle, the physical shift from standard RAM to HBM, that crazy 2027 supply bottleneck, tech stock valuations, and ultimately what this all means for everyday consumers.
Let's kick things off with the AI memory boom. How exactly is artificial intelligence eating up literally all the available memory supply out there?
Well, the short answer is that there's an absolute insatiable demand for memory right now. Why? Because the real bottleneck in AI isn't actually about how fast the GPU can crunch numbers anymore. It's about how fast it can pull data from local memory. Back in the day with early AI models, memory made up maybe 30 to 40% of the materials cost for a GPU. Today, we're at 50%. And as we shift away from just training these models, which is super GPU heavy, to actually using them for inference, like generating tokens and asking questions, the memory requirements just skyrocket. Plus, we're entering this era of AI agents where models actually think and talk amongst themselves. Every single one of those agents requires its own dedicated memory cache. If we actually build an entire economy propped up by AI agents, we're going to need like 10 to 50 times more memory than we currently have available on the planet.
And who is making all this memory? Well, looking at the massive success of that DRAM ETF, you can see the vast majority of the industry is heavily concentrated into just 3 mega manufacturers. You've got SK Hynix, and they are basically the absolute darling of the industry right now because they're the main provider of memory for NVIDIA. Then there's Samsung Electronics, a massive player doing a bit of everything. And finally, you have Micron Technology, which is effectively the big American bet in this space. These 3 companies basically own global memory manufacturing.
But hey, to really understand the risks we're taking on here, we've got to look backward. We need to talk about escaping the infamous pig cycle and its historical boom and bust reality.
You see, for the last 40 years, memory was considered a famously terrible business. It was just a basic commodity. Prices would jump up, so every manufacturer would build the exact same fabrication plants, which inevitably led to massive oversupply, and then, boom, prices would completely collapse. That's the pig cycle. These boom and bust periods usually last about 18 months, and they're followed by brutal 40 to 75% pullbacks. We saw it in 1995, 1999, 2017, and again in 2023. Now, if we track the current cycle that kicked off in late 2024 against these historical pullbacks, we are barreling right toward that scary 18-month resistance point today. So the multi-billion-dollar question is the market going to crash again, or is it actually different this time?
To figure out if this time is genuinely different, we have to look under the hood at the physical engineering shift, standard RAM versus high bandwidth memory. Let's look at the physical mechanics, because this creates a completely different landscape than the past 40 years. AI doesn't use the standard stick of RAM you'd snap into a normal home computer. It uses a totally novel architecture called high bandwidth memory, or HBM. Think of traditional RAM like a sprawling, one-story warehouse. It's great for basic storage, but terribly inefficient for rapid retrieval. HBM, on the other hand, is like an 8 to 16-story vertically stacked warehouse, packed incredibly tight right next to the GPU. You are effectively stacking 8 to 12 sticks of memory into the exact space of one. This requires incredibly precise materials, massive resources, and complex engineering. It's not just an upgrade, it is a monumental physical engineering shift.
And that massive engineering leap brings us face to face with a terrifying problem, an incredibly severe supply bottleneck. Manufacturers literally cannot just churn out more chips.
Because HBM is so difficult to produce, we are in the middle of a manufacturing squeeze unlike anything in tech history. Remember those 3 companies we just talked about? They're the only ones with the physical capability to build this stacked memory. They absolutely cannot just magically spin up more capacity overnight. In fact, their production lines are booked solid all the way until the end of 2027. And here's where it gets crazy. Typically, in a bubble, companies fake demand by taking on leverage, which leads to that oversupply crash we talked about. But today, the big tech giants are paying pure cash upfront just to hold their spot in line. Google reportedly handed Micron 40% upfront to secure memory for their TPUs. The demand is so intense that manufacturers are literally halting the production of standard, commercially available RAM just to throw everything they have at AI memory.
So with all that guaranteed, prepaid future revenue on the books, how is the market actually pricing these guys? Let's analyze their forward earnings multiples against the broader tech space. When you actually compare the forward PE ratios, which is basically how the market prices a stock against its expected future earnings, the numbers for these memory stocks are shockingly grounded. It really challenges the idea that we're in a pure irrational bubble. SK Hynix, they're trading at a multiple of just 5 to 6 times forward earnings. Samsung is around 7x, and Micron is sitting between 9 and 12. Now put that next to massive tech leaders like Microsoft or Amazon trading at 15 to 20 times, or Tesla sitting way up there at a lofty 40 to 50 times forward earnings. So even though these memory stock charts have gone parabolic, their actual valuations relative to that massive locked-in revenue are arguably pretty reasonable. We're definitely not seeing those wild 30 to 50x multiples you'd expect at the absolute peak of a frothy bubble.
But what does this all mean for us? Let's pivot to the macroeconomic reality of this shortage and look at the real-world consumer impacts and risks. Because the enterprise AI industry is relentlessly devouring almost all the available memory supply, there's practically nothing left for the rest of the market, and the ripple effects on consumer pricing are getting severe. Try building a custom PC right now. Memory costs are just skyrocketing. New gaming hardware like upcoming Xboxes or Steam machines are facing major delays and way higher price tags. Get this, a PlayStation 5 actually costs more today than it did when it originally launched 5 years ago. That's just nuts, right? The enterprise side is effectively pricing everyday consumers right out of the market. And here's the real macroeconomic risk: consumer tolerance. If memory costs keep pushing up the price of the gadgets we use every day, like forcing Apple to massively hike the price of the next iPhone, at some point everyday buyers are just going to throw their hands up and stop upgrading. So I want to leave you with a final provocative thought to chew on today. We are looking at a completely unprecedented technological shift with this vertically stacked, high-bandwidth memory, backed by massive cash-upfront orders from the world's biggest companies. It really feels like a structural change that could finally break that 40-year curse of the pig cycle. But with consumer prices surging and that historical 18-month clock ticking loudly in the background, the tension is just palpable. Will this insatiable AI demand permanently reshape the hardware landscape, cementing these memory makers as the next multi-trillion-dollar titans? Or are consumers and investors about to slam headfirst into a massive, expensive wall? It's a fascinating standoff, and for sure, one we're going to be watching incredibly closely. Thank you for hanging out for this explainer, and remember to keep your eyes on the data.